So, not to waste much time, thank you and welcome everyone. As I said before, feel free to drop your information about where you're joining from in the chat. This is a short welcome. I am just the chief stewardess for this call. We'll bring on a person who will join, or rather run the session, but welcome to a final webinar for our pre-summit virtual event for the Africa Early Stage Summit that's going to be happening in Cape Town, South Africa, which is where I'm calling from. It is sunny, it is beautiful, and if you have not booked tickets yet, Jeffrey is going to drop a discount code for 50% off the actual ticket price. That is your bonus for joining this event. But we look forward to hosting many of you who are on this call. The summit is going to be happening from November 30th to December 1st. Part of this event, or where this event stems from, is from the second part, the bonus summit, as we call it. It's called the ecosystem side of it. And this conversation really drives forward what we're trying to do in person in Cape Town at that event, ecosystem side event. So we will share more information about that as the event goes on. I think I've taken up already too much time. If I can bring on the actual captain and the pilot of the Tomiwa, that's all from me.
Thanks, Amanda. How are you? Hello, everyone. How are you doing? If you can hear me loud and clear, can you just say hello in the messages, please?
We're doing great.
Fantastic. Great to hear it. Hi, Fadilah.
Hello.
Thank you, everyone, for joining us this afternoon or evening, wherever it is you are in the world or in Africa. My name is Tomiwa Aladekomo. I'm the CEO of Big Cabal Media. We are the publisher of Zikoko, which is a youth publication based in Nigeria, focused on Nigerian youth, and Tech Cabal, which you're more likely to have heard of if you're in this audience. We cover the business of technology, the business and the impact of technology across Africa, and we've been doing so for the last 10 years. I'm happy to be with you today, speaking with this very exciting panel of investors and development professionals doing exciting work across the continent. I'm going to introduce the panelists before we jump into the conversation. And well, in no particular order, I will start with Julia. So welcome, Julia. Julia is Vice President of Developed Ventures, which is part of DEG Impulse. DEG Impulse is a subsidiary of the German development finance institution, DEG. And Julia manages the Developed Ventures program there. It's a matching funds facility that provides grants to innovative startups in Africa. And their goal is to create sustainable impact and sustainable social and environmental impact. They have a portfolio of 45 companies focused on agri-tech, fintech, health tech, renewable energy, and e-mobility. One of the big objectives is to support companies run or founded by women. Julia herself has extensive experience in impact investing and private sector initiatives in international cooperation. She's worked across a range of fields for the last 15 years. In addition to promoting DEG's early stage financing initiatives, her role includes international consulting, market research, and development cooperation in Germany and Nigeria. Welcome, Julia. Good to have you.
Thank you so much. I guess now I don't really have to say much anymore.
Well, you're going to explain all of that to us. You're going to explain it all to us in layman's English in a few minutes. But let me get through the other intros and then we'll get there. We also have Naadiya with us. And Naadiya is a senior entrepreneur by passion. She's an engineer by training. And she's co-founder of WomHub, which is a boutique advisory firm and incubator that supports clients on their diversity and inclusion initiatives, as well as building talent pipelines. They also work with female founders to support the growth of women-owned STEM businesses. She's the chief innovator at this organization, and her focus is on entrepreneurship, gender, future skills, the future of work, AI, and cybersecurity. So a very small portfolio, insignificant. WomHub has built the first female founder innovation space in Africa. She co-founded WomHub, which is a global social enterprise developing women and girls for engineering and tech. I really love a lot of these spaces that she works in. STEM's very close to my heart as well. She's also the co-founder of CyberFence, which is a cybersecurity firm that works on keeping people safer online by understanding vulnerability to cyber threats. Because that's not enough, she's a co-chair for the Saudi Arabia B20 Task Force on the Future of Work and Education, and the B20 Italy Special Task Force on Women Empowerment, and the B20 Indonesia Task Force for Women's Empowerment. So if your country needs somebody on one of these task forces, she's the one to call, definitely. She's a venture partner at 535 Ventures, which is a Pan-African venture capital fund investing in women and tech businesses across Africa. Welcome, Naadiya.
Thank you.
I'm panting a little bit after reading all that.
It was too much. Next time, just be like, hey, yes, now. Yeah, that'll be it.
No, we're going to do it justice. And then Eunice is also with us. She's investment principal at Founders Factory Africa. And there she oversees and manages one of the largest and fastest growing early stage venture capital portfolios on the continent. If you haven't heard of them, you're probably not working in tech. Eunice leads FFA's work in defining how FFA delivers returns to investors through maximizing portfolio success, making follow-on investments so that they can double down on winners, and of course, finding exits, because this money has to come back somehow or the other. She's passionate about investing in and working with African tech entrepreneurial talent and believes this is the surest path to Africa's prosperity. You're here. Welcome, Eunice.
Thank you, Tomiwa.
And last, but absolutely not least, is Fadilah. Fadilah is a fund manager for Catalytic Africa. She's also the CEO of ABAN. Again, if you don't know Fadilah, you know. I don't know who you know. She's part of the advisory board of NREACH in Africa, and has also served as director of business and innovation for the Commonwealth Africa region, and as managing partner at AMZO Management Consulting. She has over 9 years experience driving business transformation across Africa through institutional research, business intelligence, and strategy advisory. She's passionate about innovation and sustainability in Africa's entrepreneurial ecosystem, and she continues to champion cross-border investments, building capacity, and policy advocacy. Hi, Fadilah.
Thank you very much, Tomiwa. I'm happy to be here.
Excellent.
Especially among these powerful women, you know.
Yeah, I know. I'm intimidated. I shall try not to let it show. Okay, let's jump into it. And apologies for sort of the technical difficulties earlier on. We will try to make this punchy, just given that we have lost some time. So, today we're talking about sort of like the intersection between entrepreneurship development and early stage investing. I'd really like this to be done in English and not in jargon. So I'm going to ask sort of each of the speakers to talk a little bit about what work they've done as investors and what work they've done with entrepreneurs. So just in the simplest terms, you know, what have you done and where has it been most rewarding? Again, kind of starting in no particular order. Eunice, I'm going to ask you to start.
Awesome. So what have I done? What have we done with investors, with entrepreneurs?
Yeah.
So first of all, we've invested in quite a number of entrepreneurs, putting in hard cash as equity. And so we have invested in 60 plus entrepreneurs at this stage across different sectors, fintech, health tech, ag tech, literally across the continent from North Africa all the way to South Africa. And so that's the first big thing. We think that capital is important in powering entrepreneurs' ideas, and we are at the forefront of providing that capital. The second thing is we believe you need to go further. Aside from providing capital, you actually need to provide some hands-on support. This looks in different ways, which we've been doing. One is through unlocking partnerships, especially for any companies that are in the B2B arena, navigating the corporate conversations and being able to partner with corporates across the continent, and also helping companies raise follow-on funding, helping companies actually build products, actually launch them into markets. And so you can say it's providing the end-to-end support to entrepreneurs from capital to hands-on support.
Fantastic. And where's that work been most rewarding? You know, sort of like, where are the victories from your perspective?
Yeah, I would say it, when you've invested in 60 plus business, it's hard to pinpoint like the most rewarding piece. I think what I would say is we've seen companies come in at the very early stage at about 5 million valuation and go on to raise rounds up to 35 million, 40 million valuation, giving us 8x and above. So we see that as success. In fact, the company came in early and has raised a couple of rounds. We have the most rewarding part, I would say, of the 60 businesses we've invested in, and we're still making investments. Already 20 have gone on to raise additional funding at higher valuations. And to us, that is very rewarding.
Fantastic. So you're making money for your LPs. That is a positive thing. Naadiya, do you want to talk a little bit about your work?
Yeah, sure. And I feel like I've been doing this for such a long time. WomHub has built what we call the entire ecosystem, and we focus on STEM, and STEM for us is science, tech, engineering, mining, manufacturing, and we focus on gender, so women in the STEM industries. We started building talent almost 2 decades ago because you can't have entrepreneurs without the talent. So we've been building female engineering and tech talent for almost 20 years. We then, over the last 8 years, have been building female founders and supporting entrepreneurs with concessional grant funding to be able to help grow their businesses, as well as all the business support services and helping them get to the MVP and getting access to market. We've partnered with some of the largest engineering and tech companies to be able to actually support them getting into supply chains. We then built the venture capital arm to support seed stage businesses and invest. We've done 16 deals across 8 countries. And between WomHub and 535 Ventures, we're probably one of the most active capital movers into the hands of women entrepreneurs on the continent. And then we built co-working and innovation spaces to create a home for entrepreneurs, and then partnered with the likes of Cisco to democratize access to technology for entrepreneurs, both hardware and software. So if you come into our spaces, which I know some of you will be in Cape Town, and we've got spaces in Johannesburg and East London, you'll see it completely proper tech hub, right? So completely tech kitted out with some of the latest stuff and giving you access to those opportunities. And now we're building an angel fund with our community and looking at how we actually deliver smart capital into the hands of entrepreneurs that work for them. And so when we say over the last 2 decades, we've literally worked from start to exit to support women in STEM. We really mean it.
Fantastic. I mean, I really like sort of like the almost ecosystem approach, focusing on talent, focusing on capital, focusing on tech hub and spaces for people to work. What have been the biggest challenges in doing this?
So the biggest challenges it's the minute you remember we were doing STEM and gender before it was cool to do gender and STEM. Right. So over the last 20 years, convincing people that you need to invest in women entrepreneurs, that it's a good idea. In fact, actually, we're still trying to get people to understand why this is absolutely imperative, right? 2% of VC dollars went into female founders on the continent 2 years ago. It's embarrassing. We should all be embarrassed. And it's not that the deals are not there, right? It's that we just don't see, we see women as cute initiatives. We see it as CSI. We actually don't see the commercial value. And so for us being able to go, 535 Ventures, our venture capital fund, is an absolute commercial fund. It's not impact. Impact is stable stakes. The minute you invest in women entrepreneurs, I keep saying, I feel like women entrepreneurs, their dollars do yoga or Pilates stretches further than anybody else's dollars. And so it's really smart because you get higher ROIs when you're investing in women, and just getting people to that place has been so much educating in the market and beyond around why this is smart.
Okay, do you mind if let me push back a little bit, because you talked about sort of the deals. The deals are there, but I know and it's one of the kind of areas here of concern. Early stage investing, sort of return. What's the quality of deals? Like maybe Eunice is going to be able to speak to this as well, having done over 60 investments. I mean, whether you have a gender lens or not, quality of deal flow continues to be a concern for investors across the continent. I know that. You're saying that there absolutely is enough deal flow, and it's just people aren't paying enough attention, or they're not looking hard enough, they're not looking at women founders. Is that correct?
Plus, there's also inherent bias in the system, right? So we've got an incredible company that is doing a tech solution for women who have menopause. All the investors don't understand menopause, right? Because they're a bunch of guys sitting at the table who've never experienced a hot flash. So they're like, we're not sure what the market looks like. We don't think it's big enough, like menstruation. Oh, I mean, is that something we really want to invest in, even though half the population goes through it? No, we want to stay clear of and that's just the femtech project. Let's not talk about all the other pieces, right? And I went to a very generalistic kind of what women companies have, but we are spanning across many different sectors. And there's so much that has been written around why women aren't getting invested. When women speak to investors, there's always either a sexual ask that comes with the check, so they're declining investment. I mean, sexual harassment is rife, not just in our ecosystem, but others. And so women are walking away from deals. And I think if we think about, that number is so low, it's because I've had so many founders who said, I felt uncomfortable. The VC wanted to meet in his hotel room at midnight to talk about the deal. They said they'll give me the money, but I have to sleep with them. And those are the realities of it. And so, I'm here to sell my product, not my body. And so, it's there. And that's why as investors, as female investors, entrepreneurs are coming to us because they just like, we want women on our cap table.
I think that's a really great point. And I guess it does speak to a certain blindness. And so if we're saying there's not enough deal flow or quality deal flow, it might be because we're not looking for the right things and we're discounting things for 50% of the market. Eunice, Julia and Fadilah, I'm coming to you, but just before I go on to them, do you have any sort of thoughts on early stage deal flow across the continent? Would you say that you're seeing enough? Would you say that it's of high quality? Do you see this gender sort of blindness or I guess blindness to the potential of gendered products?
Yeah, so let's see. So first starting with deal flow in general, I think there's usually different seasons at different times. So I'd say looking back at 2021, 2022, there was a lot of deal flow for deals, but then they started getting overvalued. Now we're seeing that there is more deal flow, but because of the market environment, investors are now paying more attention to the fundamentals, and so they're being made very conservative in the valuations. On the other hand, the entrepreneurs have not necessarily gotten the memo. So there's a difference in deal flow in that we came to the point where there was not enough deal flow. Now there's enough deal flow, but the terms are the challenge. But I think slowly the investors and the entrepreneurs are starting to speak the same language. However, we think there's going to be a lag all the way till half of next year. In terms of the quality of the deals, I think this varies greatly. Obviously, the core hubs, Nigeria, Kenya, South Africa, Egypt is where we see the highest concentration of deals. We are starting to see some good pipeline come from Francophone West Africa, and we're starting to pay more attention to that region. What we've realized when we start talking about the quality of deal flow is very quickly when you concentrate on one market, you start to see the same model being replicated by many entrepreneurs. And so if you're talking about fintech payments in Nigeria, you start finding that, well, there are very many fintech payment plays in Nigeria. And at some point, you start to lack some differentiation. However, if you go to Francophone West Africa, you can back a business model that has been successful in another market, in a new market. So what am I trying to say? Deal flow is there if you look for it in the right markets. The important thing is to diversify geographically. And then on the gender lens issue, so first of all, I want to say we've come out very aggressively saying we want to get to 50% gender representation within our portfolio. That has made us ask difficult questions about what have we seen in the pipeline and to start to answer this question on what deal flow looks like. The truth of the matter is about 30% of the deals are the ones that come from women. So you can say it's not an equal representation in terms of the actual deal pipeline that's coming in, which means as an investor, you actually need to start being more intentional in finding these women entrepreneurs and where they are and how you can target them. So are you going to find enough deal flow if you just sit back, business as usual? Likely not. You need to put in some extra effort to find quality women.
Fantastic. I think that's pretty clear, and I'm very, very shocked and surprised to hear that there are too many fintechs doing the same thing in Nigeria. This is Fadilah, coming to you. Your experience and the work that you've done with early stage entrepreneurs and with investing. What kind of things are you seeing?
Well, thank you for that question, Tomiwa. I mean, the space is very interesting. And one thing we have to acknowledge is the fact that early stage investing is very new on the continent, right? It's less than 20 years old. But we also want to acknowledge the fact that those individuals who have decided to become angel investors over the time have gained the experience. They're now investing in a very consistent and professional manner. So you have seen the ecosystem growing in a sense that we, from a legal perspective, we have been able to develop, from an urban perspective and legal perspective, we'll be able to support those angel networks, build legal framework that are compliant to local market, which has been great, right? From the West Africa to East Africa, as well as Central Africa and the northern part of Africa. But beyond that, you're seeing more and more people joining this whole movement and saying they want to take ownership. They want to co-own companies that are emerging across the continent, which is a good thing. So you're currently having a pool of angel investors from the continent who say, we want to co-own these companies. Therefore, we're going to take the risk. And believe me, this is a delayed gratification business. Any individuals on the continent who want to jump on board to support entrepreneurs is because they believe that these entrepreneurs are the creators of values. And the value that will be created or that is being created on the continent is being done at scale, which is something that we have never seen before, right? And beyond angel investing, you know, when we talk about angel investing, people think it's just an activity that should be carried out in a very unprofessional manner. No, they're wrong. Angel investors should be trained. And that's why ABAN has dedicated so much time and resources to capacitate the individuals that are willing to jump on board, right? But beyond that, angel investors need to acknowledge the presence of other ecosystem builders, such as hubs, right? Innovative accelerators that are building these startups, and also making sure that the angels are partnering with the right entities and other VC funds so that they can probably provide the follow-up rounds of funding that will be required from the startup. So it has been a journey of building from scratch, building and then moving to collaboration, and from collaboration to consolidation. And I think this is where we are today. So we see a continent of 54 countries where angels know each other. They are helping each other, supporting each other, helping in the expansion of startup from one region to the other, making sure that the startup that needs support beyond capital, they actually get that support with the help of other individuals that are located across the continent. And of course, I will not forget the role of the diaspora that they play in this whole movement. They have been extremely supportive. Today, ABAD has about 68 angel networks, and out of the 68, we have 2 that are from the diaspora, which is significant, right? We just expect that other diasporan will continue growing these networks so that they can better collaborate and co-invest in those companies that are coming up. And as we are gearing up to the early stage investment summit, you will have, I'm sure you will enjoy reading ABAN's early stage investment report, where you will have a kind of like a diverse view and perspective on how angel investor and angel investing has grown over the years and what we have been able to achieve, especially in 2023, which has been quite a difficult year for the whole ecosystem. But nevertheless, all these individuals believe that what we're solving in Africa is different from what is being solved elsewhere. Because in Africa, we are actually responding to needs. We are solving problems related to needs. And with that, whether the economy goes south, left, north, the demand will always exist. And I think that's what is driving all the engagement and the will and the support that we're getting from our angel investors, and also the collaboration that they keep on strengthening among other stakeholders throughout the continent.
Fantastic, thank you. Let me just ask a quick follow-up question. So, checks become a lot harder. There's a bunch of FOMO for people who missed, sort of like the first big wave of exits, or some secondaries where companies have gone from $5 million in valuation, $35 million, or to $1 billion or $3 billion, whatever it is. So, there's a wave of capital from sort of angels and high net worth individuals who are something like, look, this is an interesting space. But at the same time, 2022, 2023, we've seen the funding slow down for most LPs. I mean, this has been global. It's definitely affected us in Africa. So kind of given those two kind of trends in opposing directions, what's been your perspective on angel activity in 2023? I don't know if you have any data on this, year on year, has it grown? Has it maintained? Has it dipped? I haven't seen that data kind of broken out for angel investors. So if you do have that, that'd be useful to kind of get a sense of.
Yeah, one thing to remember is that at least for a fact, I can tell you and confirm that when the startup ecosystem attracted $5 billion last year, what we have been able to gather was an amount of around $400 million as angel investor contribution to the startup ecosystem on the continent. It sounds big, but when you divide that number equally to all the 54 countries, you see that it's very insignificant, right? But now, this year, what we have observed is that angel investors are those that the existing investors have slowed down a little bit. But we have also had other new investors that have joined the game and driving the amounts to be invested forward. So, and you also have other markets that are crystallizing, right? That are developing, that are attracting more attention. I will talk about the Francophone Africa, most to be specific, sub-Saharan Francophone Africa, where you have had GRC, for example, new angel network closing 5 transactions in a year, right? That is a tremendous achievement. You've seen Cameroon that has been extremely active with more than 4 transactions in the first 6 months of the year. That has been great. But you're also seeing that these angel networks are growing in number, apart from growing in volume of investment. So for this year, I expect at least that we'll have a kind of a significant number that will send a signal to other potential angel investors on the potential of not being, like, let's say, of not being scared of this economic downturn that has affected or slowed down investment. Because like I said, at early stage level, which is very important for our ecosystem, we need this capital to be unlocked.
Because, ladies and gentlemen, you heard it here. Fadilah said, do not be worried about the economic downturn. Like, just
I
keep
mean,
going.
I mean,
You can
have
quote
to-
her.
you don't worry about it. You're solving a need. Listen, in a very, like I say, raw language, huh? When a child in a far off village in Nigeria
Yes.
needs water, the needs for water does not depend on whether the economy is doing well or bad. You need water, you need water. When a mother in Kenya needs M-Pesa to go through, they need the M-Pesa to go through, right? Because that's a need. And we cannot be focused too much on the global economic downturn because the situation we're facing on the continent is need-based. Therefore, we can only say to our angel investors, keep on pumping the capital, the cash in, and make sure that you hold the hands of those founders, advise them, monitor them, give them all the resources you can, connect them with the right people, make sure that they are very well on track with the incubator or accelerator so that they can make it, because they will, right? So, Tomiwa, angel investing is growing. By the end of this year, from 68 angel network in more than 35 African countries, will jump up to about 72 angel networks in 37 African countries. So this is growth, right? From 5,000 angel investors across the continent will go up to about 5,200. It's growth. As for the amount, I will keep it as a surprise and share it with you in South Africa when we meet in Cape Town on the 30th of November.
Ladies and gentlemen, Fadilah is keeping the information close to her chest, so you have to go collect it physically in Cape Town. Okay, I mean, it's a great response, and I think that you make a good point about sort of we're still solving fundamental needs. They're not wants, they're not luxuries. Like a lot of the problems that we're solving are fundamental needs, and so they're market dependent. I want to go to Julia, although I do have a follow-up question for you around that, which is, yeah, these are fundamental needs, but is there a market that can actually afford to pay for them and can afford to pay for these products? Because it's one thing to need something, it's another thing to be able to actually like afford to pay for it. So I'm going to let you marinate on that. I will come back to you for the answer to that question. But Julia, I've kind of taken quite a bit of time. I'd love for you to talk to us about your own sort of experiences and just like with developed ventures and what you're seeing sort of like, you know, the startups do. What's the landscape look like for them?
Yeah, thanks a lot. First of all, I think, it's a super interesting discussion already. And I think with what we do, we really try to connect with activities such as those of the angel networks on the ground. So, I mean, we are basically receiving money from the German government. So it's a donor-funded program. But nevertheless, we try to really be unlocking capital, private sector capital, by de-risking investments by putting some of our funding in, which is grant funding, always only as a matching facility. So we always, it's a necessity that companies do acquire private capital before we are able to match this funding, helping angels, other VCs or other investors de-risk their investment, of course, and in that sense, being able to also be a bit anti-cyclical, like go against the trend, the current downtrend, for example, in recent years or the last 2 years. We try to send a signal in the ecosystem that we do still believe, and I'm very much aligned with what was said earlier. The African market, of course, there are challenges everywhere globally, but you are solving real problems. Yeah, coming from a German background here, I mean, we also have a very vibrant, very interesting startup ecosystem here. But you will find solutions like, I don't know, that really address kind of the extra cherry on top of, or if you've solved everything, you know, you can also be interested in, I don't know, the type of solutions you find here a lot. But when I come to the markets you're active, we're all active in, these are not these are real problems, definitely, that are being solved, and I'm very much aligned with you. I think solutions that are being found there every day are something that will find a market. Of course, it is very risky, which is why other investors, more classical investors, are finding it difficult. We also know this experience very well. The organization I come from, DEG, is a development finance institution. So we invest in much larger tickets, much more established companies, and we do see from a risk perspective how difficult it is to do business at that end of the scale as well, and how hard it is to develop a pipeline for this more say larger scale investments. And this is exactly why we are happy to be able to support a space like this now, where we say, okay, we come in early and help to build this pipeline with the help of course, many other players who are active in the scene. This is basically what we're trying to do here. And I think what is making me hopeful is that, it's also not a secret that on the African continent, a lot of money is spent in classical development aid, which is where, of course, also some of our money is coming from development ministries. But I'm seeing more and more donors realizing that old approaches to solving challenges is not working, and they do want to find ways to support young entrepreneurs. We are receiving requests like, okay, so how's your program working? We're thinking of doing similar things, and I think that's also making me hopeful that the classical, more say paternalistic or colonial style of sending money to help is slowly changing to seeing actual opportunities and investing in those entrepreneurs on the ground.
Interesting. I think, that's a really good lens. I want to shift the topic a little bit to sort of risk and reward. So at the tail end of Fadilah's comments, I kind of made the point around, we're solving fundamental needs, but you also have a market where very frequently the ability of sort of customers to pay for the goods and services, no matter how life-saving or important they are, is relatively curtailed. And Africa is just a difficult market to do business in a number of other ways. So I want to start with Eunice, and maybe Eunice and Fadilah can take this one. How do you look at risk? How do you think about risk in early stage investing? You guys are investing at different stages, but how do you think about the risk? And again, what are your experiences? What are you actually seeing from the startups that you've backed? So Eunice first, and then Fadilah.
Awesome, thanks, Tomiwa. I think want to make a comment regarding the core challenges that we have as a continent and the key innovations that solve these challenges. That does still promise the highest returns, to be honest. So when you think about the fact that more than 90% of Africans operate on cash, right, backed and are unbanked, the fact that we have 54 countries in one continent and money needs to move around, the fact that we have SMEs and individuals not financially included, the fact that healthcare, there's need for access to quality, convenient, and affordable healthcare. Like, these are core challenges, and we're finding a lot of innovation solving exactly these challenges. The trick comes into making sure you're building a commercial model on that challenge. And that is something that we are very keen in evaluating when we're looking at a business. So first, you want to answer, is there a large enough market? Is the problem big enough to warrant a solution being built? And if the answer is yes, it's saying, well, are you able to commercialize the solution that you're building? I'll give you an example of fintech. Of course, fintech, if you're doing anything to do with money flowing, it's easier to charge some sort of transaction fee or some sort of software subscription fee, right? If you're anything to do with care, that becomes a bit nuanced, right? It becomes, well, are you doing B2B or B2C? You could be solving access to affordable healthcare, but going the B2C route, you might find that is a bit harder to commercialize at scale. But if you're doing that with a B2B side, maybe you're helping hospitals be able to purchase medical equipment that they otherwise would not have been able to because you're going to smaller hospitals in deeper parts of the country, then you can build a commercial model there, because at the end of the day, you're dealing with a business that actually can repay you. If you're building an app that consumers need to download and pay for, it's very unlikely that you'll be able to build a scalable model. So I think it all boils down to what exactly is a business model. Who are you solving this problem for, and who can actually pay for it? I'll give a last example with agtech, because that has been a very difficult sector. VCs will tell you it's been hard to find models that are scaling. However, if you start being more innovative about the model that you're building, for instance, if you're providing advisory services to smallholder farmers, and you envision in a world in which the smallholder farmers will pay for your product, you're getting it wrong, because they simply will not pay. But if you're able to aggregate these smallholder farmers, connect them to a market, and then layer on inputs on the platform, then now you're moving money and you can make money off your solution. So when we're looking at the risk, to answer your question, it is all dependent on the specific business model that is being built, and then asking then what is the execution. Execution risks tend to be the biggest. So it's not the politics of it, it's not inflation, it's execution. What is it actually going to take to deliver this idea to a company that can scale? So now we're getting into what are the market dynamics. For instance, if you're building a marketplace, that means you need to think about the logistics part. You need to think about warehousing parts. If you don't have strong partners that are providing those services, then you run into an execution risk of actually delivering your service to your consumers. So execution risk is the biggest one, and how we like to navigate that is very early on identifying partners. Either you're outsourcing the problem, you're outsourcing parts of the value chain, or you're prepared to actually build along that value chain. Usually there are pros and cons to both approaches, but it boils down to, do we have the team that can actually execute? So execution risk is the biggest one, and we spend a lot of time on actually discussing what will it take to deliver this business model at scale from a team standpoint, and are you in a position to do that? You're
Sorry about that. It was a really robust answer, Eunice. Thanks for sharing. I'm actually going to have to modify your question a bit, Fadilah, because the process that Eunice has just described is pretty intensive. So it's understanding models, interrogating the models, it's looking at the team, the execution capacity, it's investigating it as they go along. Now, from a risk analysis perspective, I'm sure that most angels aren't going to be equipped with the team and the sort of level of capacity that Eunice has. How do you think about risk management for angel investors? And I know sort of the entire point of ABAN and sort of collectives is that you can sort of aggregate expertise and capacity to do this, but it's still not, Founders Factory Africa sort of going through 1,000 deals annually, or I don't know how many deals a year they see in total before they invest in the number that they do. But for angels, how do you think about sort of this DD process, this kind of understanding the risk level of the things that you're investing in? And that's for you, Fadilah. Yeah.
There are a couple of routes that we have observed in the market, right? The first one is that you rightly mentioned that Angel Network had leveraged or have been leveraging, and they still do, on the diversity of the group, making sure that each angel can contribute to actually identifying or even verifying or carry out due diligence with regard to the startup they're interested into. That has worked. In some market, it works well. In others, it's a bit not so well. And it's really much related to the structure of the Angel Network group. But more and more, we're seeing Angel Network relying heavily on the support of innovation hubs and incubators, who are the first contact of these startups that are looking for capital, right? They get the innovation hubs and the accelerators to contribute in the whole process of due diligence. And that has been quite helpful. In fact, when you see the model of Catalytic Africa that takes into account the contribution from Innovation Hub, the startup, and the angel network / angel investors, is essentially an example that pretty much depicts the embedded due diligence that happens at that early stage of funding companies on the continent. But now you're also seeing that angel investors are becoming specialists as well. You know, there are angel investors that are moving from sector agnostic to sector specific. And having those angel investors emerging as specialists has been quite helpful in actually managing risk, making sure that the due diligence is done properly. We talked about, Eunice talked about the commercial due diligence and taking into account the team that is executing that commercial model. But one other element that we are now paying more attention to is the legal due diligence. And you know, because of the diversity of our jurisdictions on the continent, doing a transaction in Francophone Africa is very much different from doing a transaction in West Africa. So from ABAN, we have made sure that we are able to provide template examples of investment documentation to support our network carry out legal due diligence that are compliant to the local requirement, right, within each of these markets. And I will say that probably 5 years back, if you look 5 years back and you look at today, I can confidently say that our angel networks and angel investors have been a lot more deliberate in making sure that they're paying attention to all the various risks associated to transaction. But most importantly, beyond execution and commercial, looking at the legal way associated to it.
Okay. Interesting. Okay, so I think that shared burden is clear. People are developing expertise as well, and you're going beyond looking at business models, thinking about things like legal. So that's all really important. There's a piece that you said that I want to pick up with Naadiya, which is around the role of the hubs. Now, it's interesting. You are talking about them essentially providing some due diligence. And I know that hubs will provide business support and education and try to help founders and entrepreneurs get sharper about their business. But are they actually the right people to do due diligence? Are they not too involved? And then from a skills, talent acquisition perspective, is that not more their focus than actually being able to DD the deals that they are, or the startups that they are working with? I want Naadiya to maybe pick this up first, given your work with WomHub.
Sure, and look, the quick answer is not all hubs are created equal. I think there's more than 650 hubs on the continent, of which about, I think the AfriLabs, their last report, I think 24% were actually innovation hubs, right? The others were kind of co-working space. So the others are a little bit of support, business support. And I think the piece there is that how do you find a hub that has a very robust process? So things like including business diagnostics, so you can really understand where the entrepreneur is and meet them where they're at, then go through, the robust support and being able to help them get, if they are, it depends on where the hub is, if it's an early stage incubator program that the hub is running, are you able to kind of get them the right kind of resources to get them to market? Can they connect into angel networks? Can they give to other forms of capital? And then ultimately, can these entrepreneurs build businesses to actually go out and make money? And what we see a lot, and in the South African context specifically, because our market and our companies' government policies are focused at enterprise and supplier development, you have lots of hubs that are in the business of being a hub and supporting entrepreneurs. So you've got lots of entrepreneurs going through, but at the quality is not there, right? And so I wouldn't trust, some of these processes. I think you've got to be very deliberate around who in the ecosystem is being very, very diligent around entrepreneurs, or who in the ecosystem is ticking a box so they can get paid. And there's kind of a big difference in the approaches. But hubs absolutely have an opportunity to be able to, as Fadilah said, connect some of these dots, right? And work more closely aligned with angel networks, and to Julia's point, matching that funding to de-risk it, because to be honest, it's easier to start a fund that is going to support at Series A, Series B, Series C. The challenge is at early stage, it's at seed, pre-seed. And to be able to do that effectively, a VC firm needs to be raising a fund of, I think the number was like over $50 million to make it make commercial sense from a VC perspective, right? We don't have that kind of money on the continent that is going into this space. And so how do we work collaboratively and in smart ways to work with the right resources and people who are doing it for the right reasons?
Okay, I think that's pretty clear. I like that a lot, and Flo is also agreeing with you. For those in the audience, if you have questions, please do start to type them out in the chat. I think that's quite useful for the audience. There was a question earlier that I actually wanted Eunice to answer, which was in terms of market size. When you say an opportunity is big enough, what's your minimum for big enough? The question from Muktish was, is that a minimum of $1 billion? Or what does it take to say that a market opportunity is big enough?
Yeah, I can go first. I wish it was as simple as saying $1 billion market. That's what we're looking for. And usually a market could be $1 billion, but you're only able to address 5% or 4% of it. So maybe it's more useful for me to take you through kind of the rationale or the thought process when you're looking at the size of the market. Is one, let's give an example of, a typical VC is looking to make 10x of a return in every company. We continue to be bullish that is possible on the continent. The problem is big enough and the entrepreneurs are smart enough. And so if you want to make 10x and you're coming in at a valuation, let's say you're coming at a valuation of 5 million, that means that by the time you're exiting, you need to be at about 60 million if you account for dilution. And so we'll do the math and say, how much revenue do you need to be making at that level? You need to be somewhere close to, if you do 10x, that's how much? That's $6 million in revenue. So then I'll ask myself, for you to achieve $6 million in revenue, how many people do you need to serve? And then work that backwards. If you need to serve 1 million people, then we need to look in the market and see, do you actually have 1 million potential users? Considering the fact that there are other players in the market that might be doing what they're doing, that they may have a market share. Maybe you have a fast mover advantage. Maybe you're coming in second, but you're doing something very differently. So then it becomes how many users can you as a company be able to acquire compared to everybody else? So don't think of it as what's the size of the market. Is it 1 billion? Is for me to scale to get to 10 million or 20 million revenue, how many people do I need to serve? And what does that mean in terms of the market share? If that is something that is reasonable, then we'd be bullish on that market size.
It's a really great answer. I like that. Yeah, I think that's a really great sort of methodology for looking this, rather than Nigeria has 200 million people and they all need water, and so we're going to create the next $1 trillion company selling them water. Julia, I want to come to you with a question around sort of how you determine success. So when you're, for your development program, for the kind of sort of like fund matchings that you're doing, how do you define success? You're muted. Okay.
Yeah, I can second some of the things that Eunice said earlier already. We do take a similar approach that a typical venture capital fund would also take. We are only in the lucky position that we do not have to pay back any investors in a similar fashion that you have to. But of course, we are asking how much has been raised by our portfolio companies. We have a strong impact focus, so we have a set of KPIs that also determines success for us, how many people have been reached, CO2 has been saved, a typical set alongside the SDGs. We do have a female focus as well. So of course that is a very important role. How many female founded companies or female focused companies can we support? That is a challenge, clearly. I think that's no secret to most of you here, that it's difficult to steer the portfolio in this direction. But that's a determinant of success for us as well. And ultimately, I think, we, and that relates a bit to what you were saying earlier about the risk profile. We are taking a portfolio approach. Yeah, we are quite aware that not each company will succeed, and I think you have to be honest also about this, especially when you talk in my capacity also to donor funds that are being invested. But even if it's private capital, I mean, you have to be honest here and explain that this is early stage investing. There will be companies that won't be here in the next few years. But I think if you have, and that's why you need a certain size of portfolio, I think that's definitely also our approach. We, as I mentioned, we have 45 companies now, but we started only 3 years ago, and I see this growing at a relatively, a large or good pace as well, because in the end, I think, it's a bit about, diverging the risk as well. So I hope to be able to report in the next few years on the exact size of how this then turned out and the success factors we've achieved by then.
Fantastic. Thank you, Julia. Again, for the audience, I'm asking if you have questions, please do put them in chat, or if you want to raise your hand. I believe, yes, there is a raise your hand button at the bottom center. If you have questions you want to ask the panelists. I know we started a bit late, but we will be pulling this to a close, maybe somewhere between 20 past and half past. So, I want to ask about the role of government in this ecosystem. So, with early stage investing broadly, and then sort of developing entrepreneurs and developing this ecosystem. I'll open it to the panelists if there's anybody that has like sort of a particularly strong position on if they've worked in government and they found it difficult, or what role government should or shouldn't be playing in this ecosystem. Does anyone want to tackle it, or should I assign homework? Naadiya, it looks like you have things to say about this.
No, I laugh because at WomHub, one of our accelerators was actually funded by a government entity. And it was interesting to work for them because they were providing grant funding to entrepreneurs for equipment. But for us as ecosystem players, we were happy to support that process. And in the first year, they had given us funding to manage that. And in the second year, they said, well, we think that ecosystem organizations should do this out of the goodwill of their hearts. So we'll give the funding for the entrepreneur, but not to support the entrepreneur, organizations managing the money. And that, has a really interesting piece because there's so much paperwork and red tape attached to the money that we said, sorry, it's just too much work. And it's just, we're happy to, we're not a nonprofit. We are a business. And even our nonprofit side can't do this because the amount of paperwork and red tape to get the money. So South Africa is a bit of a different ecosystem because we've got a lot of, government entities. Our Department of Science and Technology there's a bunch of different funds. They are more geared, not at early stage, they actually are geared more at later which are bigger projects, bigger ticket sizes, it's hard to get the money. So it will take about 2 to 5 years if you are successful to actually get the capital deployed. And I think that's the piece, right? You don't have that nimbleness, the agility that you require, and you need an enabling environment, right? So you see what happens in Nigeria, where they try to overregulate an industry because they want to revenue, or it's a different piece. So I think that the role of governments is step back, create not just an enabling environment, but don't also get involved in what you don't understand just because you money. And I guess that's my piece around kind of there's the good, the bad, and the ugly when working with governments.
It's really interesting. In Nairobi at the moment, I've had some conversations with nonprofits, and they've talked about this sort of like the process of applying for grants and whatever. There's been too much paperwork and not being worth it. So I can't imagine commercial entities being willing to go through those kind of sort of like hoops to get money 5 years later. I think that's about the time Eunice is hoping to exit and provide returns to our investors. We have a question from Muktish, which is, it's easier to support founders you can see how it's easier to support founders who've been through incubator and accelerator programs, but what about those who don't have access to those hubs? Is that a red flag? Who wants to take this? Julia, Eunice, I guess.
You want to go first, Eunice?
Yeah, I'm wondering if I'm best placed, considering I wouldn't be answering it from the perspective of an angel investor. However, I think that there's only so many hubs, only so many accelerators, and there's many, many more entrepreneurs. I think what is more important is breaking down what are the different elements you need for success at different stages. Whether you can do that on your own, great. If you need an accelerator or a studio to do that, then you can go that route. I would break it down to simply at stage one, you need to have a validated concept. You'll spend a lot of time in hub, in accelerators, in incubators, in studios such as yourselves, going through what is the concept? Is it a valid concept? Is it a big enough market? Like, there are quite a number of things that you can actually tick yourself, not necessarily having to go to an accelerator or an incubator. The next one is, can you build a minimum viable product that can be a good use case to launch into market and get some feedback? Now, the mechanics of building that minimum viable product, again, is things that you can cover in an incubator or a studio. But if you can do it yourself, by all means, do it. Then the next step is you're launching products into market. You're looking to get that product market fit. It's essentially you have built a product that customers love. They're willing to pay for it. They're coming back to do that. Do you necessarily need a studio to help you or an incubator to do that? I don't think so. I think you can do this yourself. However, where people go wrong is lacking that framework of what are the important things to focus on at different points in time. When you don't have that framework, unfortunately, then you're not setting yourself up for success. So I'd say leverage online resources, leverage YouTube. This information is available. The advantage of an accelerator or an incubator or a studio is that you have additional people that are helping you get further faster. It doesn't mean you can't do it on your own, as long as you at least have the right framework of what important things should I be focusing on as an entrepreneur at this particular stage in my company. So look, it doesn't mean you're successful to join an incubator or not to join an incubator.
Absolutely.
Yeah.
Absolutely.
Okay.
Yeah, if I can add to this. Oh, sorry, you were saying.
There are online, just to add to what Eunice said, there are online resources that do exist. For example, Tommy Davis, investment worthy. You can actually check that book, and if you have the discipline to follow the guideline, you can make it. You have access to the poem framework that is available online that you can follow, right? You said it all, Eunice. Thank you.
Yeah, and I just want to add from our perspective, I think what is more important than whether you're already part of an existing program, which of course we do, also are happy to see occasionally, but what is more important, are you willing to be guided once we've invested? Yeah, because that's also a part, I think it's same for you, Eunice. It's a part of our program as well, that we do want to provide you with technical assistance in these areas where we feel you do need help. And what is indeed a red flag for me are founders that are not ready to be guided or counseled, by experts, of course. And you sometimes do see these founders who kind of feel they've already figured it out. And I think there is no company at this stage that has figured everything out. So if you're ready, and we for that also work a lot with, mentors, local experts, of course with hubs as well, who provide this service. And if you're open to, be guided, I think that's more important than whether you're already on that journey.
Fantastic. I think that's pretty clear. Thank you. Cheque was going to question a very important question, which is how to reach all of you investors outside of this session. So if you can ask the panelists to please drop whatever the best way it is to reach you in chat, whether it's a LinkedIn or an email or whatever it is, please drop it in chat so that when anyone has the next $1 billion company, they know which of you to call and how to reach you. I am going to kind of pull this to a close with sort of one final, requesting a final question from each, or a final answer from each of the panelists, which is, we're going into 2024 now. People are doing the 2024 planning. They're thinking, what would you say is critical for, this is an audience of angel investors, would-be angel investors. What should they be thinking about as we go into the new year? What kind of opportunities should we be looking for? What kind of pitfalls should they be watching out for? Fadilah, I'm going to ask you start. I'm going to go to Naadiya, Julia, and then Eunice, you can close it out. So Fadilah first. Or what you're thinking as you look forward.
So three things. Number one, a lot more solid framework for Francophone Africa, a platform to strengthen the co-investment opportunities, right? It's no longer a NABAN or Victoria Angels sticking to Kenya, but we're more about Victoria Angels going to Cameroon to invest, leveraging on Cameroon Angel Network, and Cameroon Angel Network going to Dakar to invest, leveraging on DNA, right? Like really a stronger co-investment platform. And number three, the opportunity to further strengthen the portfolio management companies, portfolio management services that will be provided for the companies so that they can raise additional funds, potential exit as well for the future. So we need to see more exit happening.
You know what? I wish actually I should add that. Add that as a separate question, which is around exits and sort of what the market looks like for exits. So feel free to add any thoughts around that as you speak. So Naadiya, you next.
So I think that, and I've always been incredibly optimistic, and I'm just an optimistic person in general, but I think that if we see more capital flowing into, funds and through angels into entrepreneurs, especially now when, you're getting valuations that are a little bit more realistic, that the market is down, it's actually a great opportunity for us to actually benefit when everything gets better at the end. I think there's an opportunity for us to actually create bigger angel networks. So because we work in STEM, we work with corporates, there's, a lot of untapped opportunity with executives and even young people who are coming and who've got some, their first check. How do we start to actually get people to think, with my first check, I can actually become an angel investment syndicate, or I can invest here. So how do we actually change the language of investing to the ordinary person on the street with their first job, right? And build that generational wealth on the continent. So if you've got spare money, put it into entrepreneurs and let's see what the continent will do.
Fantastic. Thank you. Julia?
Yes, I think, well, much has been said already. You were asking about exits as well. Of course, I think that is another complete session, which I'm not going to tap on now. For us at the moment, I mean, we are trying to see how we can progress our companies towards, follow-on investments in the DFI community, in the funds, in the private equity funds we are invested in. There is certainly still a big gap, and I think it's a challenge for all of us to help close this. And that relates to, of course, seeing successful exits as well. But it's a young ecosystem. I mean, as you said earlier, Fadilah, I think this only started 10 years ago, really, or maybe a bit more, but there's still a long way to go. And I think we are at the start, but we're off to a good start there.
Fantastic. And Eunice?
Yeah, I think there's a lot to be excited about. I know we've said the ecosystem is young. I would actually push that we are maybe 8 years old. If you look at how much VC funding we raised 8 years ago, it was next to nothing. And so we've grown tremendously over time. I am excited still because in the grand scheme of things, we are still on the ground floor, right? Like a friend of mine, I keep giving this example that a friend of mine was comparing the amount of VC funding coming to the continent to the size that's going to Ohio State in the US. Of all states, Ohio State, right? So it tells you that we have such a long way to go, but also it tells you that now is the time to capitalize on this growth and on this potential. So I'm very, very excited about that. And on the exits topic, Julia is correct. It's a big one, but maybe what I'd quickly say is that what you're coming to realize is one, IPOs are not going to be the main source of exits in the next 5 years. Our capital markets are not there yet. However, we'll see how that's going to start looking like going into 10 years. Private equity secondary sales are not going to be the way either, because the way private equity looks at valuations, a multiple of your earnings after, basically a multiple of your EBITDA, right? And tech companies sometimes take long to break even, although this is something that we're pushing companies to do, to start thinking about profitability early on. We think majority of the exits are going to come from strategic acquisitions. So seeing the product that I'm building, who is it valuable to internationally or across the continent? Is it a big international corporate like a Google or a Visa, or is it a big local corporate that will find the distribution we have, the licenses we have, the market access that we have valuable? So I would say both on the investor side and the entrepreneur side is thinking about like who is going to be valuable to 5 to 10 years down the line, and how can we start to make sure we're positioning ourselves for those exits? Because IPOs probably not in this term. Yeah.
Fantastic. I want to say thank you so very much to everyone in the panelists for joining us today, and to everyone in the audience as well who's taking the time to sit with us. I found this definitely very fascinating, and I echo TD's point where I hope there is a transcript and outtakes for the audience. That was a really, really exciting conversation. But thank you very much, Fadilah. Thank you, Naadiya. Thank you, Eunice. Thank you, Julia, for joining us today. And thank you to the team for hosting us and giving us this opportunity. Thank you, everyone. Have a wonderful evening. Handing it back to you, Ayonda.
Thank you to our conversation pilots, Tomiwa. And as a very special thank you to everyone that has joined us, despite all the difficulties that happened. Jeffrey will repost again our 50% discount on a ticket to join us, to join all these panelists at the Africa Early Stage Investor Summit from the 30th of November to the 1st of December in Cape Town. This recording will be sent through after the call or the session has been ended, but reach out to us if you have any further questions and if you really want to find out how to continue and join the ecosystem side event, where more of this type of conversation between, again, ESOs and investors and the ecosystem will be happening more actively. Thank you very much again, and depending on where you are, good afternoon, good evening, and good night.